Hello and welcome to the second panel discussion based on the previous teaching we had on AS revision on business studies. The last topic that we discussed was sources of finance. So based on the sources of finance, we are here to discuss some of the questions that students have asked as well as to discuss some of the IAL past papers. So my name is Yasas. I am from Center for Higher Secondary Education.
I am Ashia Miss from Villa International High School.
I'm Dilip from Ahmadiyya International School.
Okay, so let's move on to the questions that students have asked. The first question that we have received is, do we have to return the money contributed back to the investor in a crowdfunding?
Here the word return is a bit tricky, I feel, because when we talk about return in business, it actually is talking about a profit in return.
Yes.
But here there are two aspects to it. Now in the case of a crowdfunding, let's just say the business want to raise 10,000, but they were able to raise only 7,500. In this scenario, since the amount of money is not collected, they might have to give back this money amount to the
Because
investor.
they can't start the business if they don't have the adequate amount that they have anticipated.
But if it is the return,
But yeah, I think there are two aspects in this question. One is, if the question is in the case like whether we have to return the amount with an interest, like as if we are doing in a bank loan. In that case, the answer would be a no, because in a crowdfunding, since crowdfunding is not a debt financing,
Which is equity financing.
we don't have to give the money with an interest. Rather, we may have to give a part of the profit if in the case of an equity crowdfunding.
Yeah,
But
so
sometimes if the crowdfunding is a donation-based crowdfunding, in that
for
case,
charity, for example.
Yes, for example, a community project. In that case, we don't have to return back, but sometimes a gift or a free entry, something like that will be returned, or sometimes the return will be intangible also. Maybe a sense of ownership will be the only return that the investor might get.
I think this all depends on the platform of crowdfunding they use.
Yeah.
There are different platforms. One of the most famous one is GoFundMe.
Yeah.
Yes.
And it varies from countries to countries and different platforms of crowdfunding.
Yeah, that's right. So keep in mind when you answer that sort of a question, you have to check what the case study says. So if the case study, like Ashia mentioned, that if the case study talks about that they have raised some money but they are unable to start the business, whatever the money that they have collected through the crowdfunding will have to be given back to the people who have invested. And in the case of a business where they get a return, like Dilip sir mentioned, that it is a return that they would get, but not as a debt financing but as an equity financing. So you have to be careful when you look for the evidence and see what sort of a question in relation to what sort of an evidence that the organization or the case study is talking about.
Yes.
Okay,
Exactly.
right. So let's move on to the next one. What is a venture capital? I think we have already
Venture
discussed
capital is
that.
already discussed in the teaching session, but in short, we can say venture capital is a debt financing. Sorry, it's an equity financing for a business. Usually, it is invested to new startups where they would find it difficult to source from other sources of finance like bank loans and other financial institutions.
Usually high risk businesses.
High risk businesses, because banks and other financial institutions may not be willing to take this risk, whereas venture capitalists will.
Yes.
Okay. So I think that has been already covered in the discussion as well, but since we have a question, that's the kind of quickest answer we can give you at this time. Okay, third question. What is the difference between a venture capital and a business angel? I think it's a good question because this is a
Yes.
common question that we get.
Usually those two terms are confusing for the students.
Well, the main difference is business angel is an individual person who is already a successful businessman, perhaps. So they might be willing to use their funds to invest in a business. But venture capital is more like a pool of funds from different businessmen together in a collaboration kind of.
Or we could say institutional funding.
Like Dragon's Den is one of the
Yes.
biggest platform
That's
in the
right.
venture capital area. You want to add something?
And moreover, venture capitalists, they usually seek a position in the business because they wanted an authority, they wanted some kind of decision-making power. But whereas in the case of business angels, they won't seek a position in the board of directors, but maybe if in the case of any advisors, if the business needs, then they will be willing to provide.
But I think the common thing is that in both the cases, they need the part of the stake of the
Yes.
organization
Yes.
in
Yes.
return to what they
In
have
return.
invested.
Otherwise, there's no point of investing.
That's right. So if we are to give some examples from venture capitalists, from the business angels point of view, if you look at one of the previous case studies from the previous IL, that Bulant Industries,
Yes.
he got the money from Ratan Tata.
Yeah.
Yeah.
And also the famous Mark Zuckerberg,
Mark Zuckerberg for Byju's learning app, they have
he got
invested.
the money from Peter Thiel, who is the co-founder of
Yeah.
PayPal,
Yes.
which are typical examples of business angels.
There's also one more key feature in business angel and venture capitals. Like angel investors are more into the early stage of investment for the business.
Yes.
But venture capital could take from any part.
Anytime, that's
Anytime.
right. Even for
Yeah, if
expansion,
for
that's
expansion
right.
also it's
yes.
available.
Yes. And also the amount varies.
Varies, yeah.
Yes.
Okay. So the fourth question, this question actually is from the edXL textbook. The student wants us to explain these points which are mentioned in the edXL textbook. So there are two parts of this question. The first question is about an explanation that the student needs in terms of this particular benefit with regard to the internal financing. The business will not be subject to credit checks. So that is the first part. So I think we can first take up that.
Yeah, so I think we have to first explain what is a credit check.
Yes.
Credit check is actually an investigation on the financial behavior of a business. So when a lender, before lending the money to a business, they have to make sure that the risk is lower. So for this purpose, they might investigate into the credit history of that business. And based on that credit history, a credit point will be given, or some countries it is called as credit score or CIBIL score, etc. So based on this score, they will decide whether to lend or not.
To make sure their risk is, the lender's risk is minimized.
Minimized.
Yeah.
And now the problem of more credit check is when more credit check is done, the credit score will go down.
Go down.
So in that case, in future also the business will find it difficult to get a loan or any financial assistance from any investor or a bank.
So the benefit here is if you take your own internal financing, the business does not need to go through this kind of a credit check because the money is readily available within
Yes.
the organization, so that the credit ratings won't affect.
Won't affect.
Yes. So the second part of the question is about a disadvantage with regard to internal source of finance. There are no inflationary benefits with internal finance.
So here it actually means is suppose if they take a loan and there's an inflation going on, so it's like the borrower gain and the lender loses.
That's
So
right.
this is kind of a disadvantage for internally sourced company because it's not affected to them, but otherwise it could be an advantage if they had gone for a loan.
Yeah, because you know that during an inflation, the real value of money falls.
Yep.
So that advantage won't be there if they take, because for example, if you take 50,000 loan from a bank and if you keep on paying 10,000 every month, during an inflation, the real value of 10,000 would not be same as the 10,000, it would be lower than the 10,000. So that means the borrower will pay less in terms of real value of money during an inflation.
Yeah.
But that advantage won't be there since the borrower has not taken money from a bank, but they have sourced the money from their internal sources.
That's fine.
Right? Okay. So the next question that we have, question number 5, once again, a kind of an explanation that the students want based on two types of external source of finance, venture capitalists versus crowdfunding. I think we need not to go back to the venture capitalists once again since we already have discussed that. But okay, how we can explain once again a little bit more about crowdfunding before we go to the next question?
Crowdfunding is sourced with a platform, which is a crowdfunding website. So what does this crowdfunding website does is, it will link the borrowers with the investors. So there are two groups of people, as crowdfunding website says. There are people who wanted the money, that is borrowers, and there are people who are willing to invest the money into businesses, who are investors.
Yes.
So this is a platform to connect these two groups.
And like we said earlier, it is all about equity financing.
Equity financing. Yeah.
In both cases, the businesses have to be very ready with their proposals, because they still need to like persuade these people to invest. So even in a crowdfunding where the return is not much expected, then they need to make sure that why should a person give you money?
Exactly.
So it's in both situations, the business has to be very prepared to approach them.
I think that is why we talk about the importance of business planning
Yeah.
as an important document regard to this, connected to this particular topic. Okay, before we move on to the next question, I think it's important if we quickly talk about the difference between crowdfunding and peer-to-peer financing as
Yes.
well. Because this
Yes.
is another question that some students have when we talk about the difference between crowdfunding and peer-to-peer lending.
Yes.
The main difference is peer-to-peer is a debt financing, whereas crowdfunding can be an equity finance, or sometimes it can be a donation where there is no return, or maybe the return will be in the form of an intangible thing.
Yeah. So in simple terms, what we can say is that peer-to-peer lending is debt financing, crowdfunding is equity financing. I think that's the main thing that students need to remember or keep in mind, that when it comes to peer-to-peer lending, it is debt financing. When it comes to crowdfunding, it is equity
And also we
financing.
need to note that peer-to-peer lending is something like a matching that takes place in the online platform. Like
Yeah.
somebody wants to they want some amount of money to be raised, and there are some people who are willing to give money. So basically, the whole website matches you
This
up,
is the
just like a
coordination
job,
part,
just
yeah.
like a job
Yeah.
site, website, right? Something like that.
Yes, so that is something that we can see in both crowdfunding as
Yes.
well as in the
Yes.
peer-to-peer lending, because both these things take place on the same platform, online.
Yep, online.
And there is another difference also. The peer-to-peer financing, one can apply even if he owns a business, or an individual also can apply for a peer-to-peer lending, because private loans are also provided.
Right.
But in the case of crowdfunding, it is mostly done for community projects or some businesses.
Yes.
Right. Okay. So next question: will the debenture holders get a part of the company's profit?
Well, debentures are usually the long-term loans of the company, and they are like given a fixed interest rate. So whether the company makes a profit or not, they are entitled to get this interest. Do you want to add on something?
Yeah, as debenture, it is a debt financing. Only they will be given the return with an interest.
So in simple terms, it's like a bank loan.
Yes.
It's like a bank loan.
But it's a very long-term.
It's a
loan,
long-term
yeah.
one.
It's a long term.
But the mechanism how it works, where you have to pay a fixed amount,
Of interest.
works just
Yeah.
like a bank loan.
And then only on the maturity, they have to pay the entire
Amount. Yes.
But there is a particular debenture called convertible debentures, even though the syllabus doesn't specify about that. Specifically in convertible debentures, the debenture will be converted into share after a specific period of time. Only in that case, the company have to share the profit. Otherwise, in normal debentures, they don't have to give any profit shares.
I think since the syllabus does not specify, students might not need to go
Need
into
to
that,
go into
but
that
this is
detail.
just for your knowledge
Information.
purpose. Okay, so don't think too much about it. If you haven't heard about it, you can do some research, that's fine, but this is just for your understanding. I think the best thing what you need to do is to have an understanding on general debentures. This is just for your understanding or knowledge purpose. Okay, right. So the next question, connected to the debentures itself.
Yeah.
Advantages and disadvantages of debentures.
I think one of the disadvantage of debenture is if the company is not ready by the time of maturity, then they are going to be in trouble. Yeah. So I think that's one of the biggest disadvantage of.
And the advantages is it is a long-term finance. Maybe for 20 or 25 years they can hold the finance. And also they don't have to give a part of their profit, as we have already discussed before.
And I think the ownership is another advantage,
Is
where the
another
ownership won't be diluted.
Yes.
And speaking of disadvantages, I think we can talk about there's another disadvantage. It's only available for limited liable companies.
Yes.
If it is an unincorporated business, they won't be able to
get
raise finance through debentures.
debentures.
Yeah, when you touch upon that point, I think we also need to highlight that we are talking about different sources of financing here, but certain organizations are not entitled
Yes.
to certain
Sources of finances.
So I think there is one area the students need to be very careful about. You read the case study first and think about what type of organization this
That's
is.
right.
If it is sole tradership, they cannot sell shares to raise finance.
So we can't talk about the debentures
We
in
can't
that
talk
case.
about debentures. So you need to understand what organizations are allowed, what sources of finance. So there is one key important thing we have to remember when answering
Yes.
source of finance questions, right, sir?
Exactly. And the other thing is, I think they also should understand the purpose
Yes.
that they are looking for the money.
For example,
Yes.
if they are purchasing a fixed asset,
Yes.
they can't take trade credit.
Exactly. So you need to understand the type of the organization from the case study, whether it's a sole trader business or a partnership, or it's a public or a private limited
and why
company.
they need the money.
Yeah,
And
the
the
purpose
purpose
Yeah,
of
the
the
purpose.
finance, whether they want it for expansion or whether they want to buy a fixed asset or whether they want that money for inventory. So you need to make sure all these things are looked at when you look for the answer about a particular
Yes.
organization's point of view. That is why once again we talk about the importance of context.
Yes.
Okay. Question number 8. How to develop the points if trade credit as a source of finance comes for 20 marks? Okay, I think we have a question even from that. If time
Yeah.
permits, we should be able to discuss that as well. But
Yes.
okay, in general.
In general, I think when it is about trade credit, one important thing just we discussed, right? We need to link why they are using or why they need the money for.
That's
So
right.
whether first the trade credit is option or not is one thing to remember.
Yes.
I think one of the advantage of the question, I think the question is asking how to develop
The points.
So
yeah.
for a 20 marker, we usually advise the students about at least write 3 points with evaluations. And
With
for a
good explanation.
with
Yes.
good explanations. So for a 20 mark, you need to go for an immediate evaluation so that you will be securing a higher mark, because I think in a previous session you mentioned about level based marking.
That's right.
So in business, all the 20 markers are marked based on a level. So that means if you write your evaluation, even with the very first point, you are entitled to a higher level immediately. So this actually helps the student to score better.
Yes, and also I think when you look at this kind of a question about developing a point on trade credit, in my opinion, I feel that they would not ask a straightforward question on benefits and drawbacks of a trade credit for a 20 marker
mark,
question.
correct.
Most likely it will be the suitability
So
Or the
maybe
comparison.
comparative nature.
Comparison of something, yes.
That's the thing. So my guess is if EdXL is to ask a question on this kind of a 20 marker,
Yeah.
they would obviously try to have a comparison.
Comparison.
Maybe trade credit versus a bank loan,
loan,
or
yes.
maybe
Or
a trade credit versus
debt
bank
factoring,
overdraft.
maybe. Debt
Or-
factoring.
Yeah,
So-
that is the kind of trend we are seeing so far,
That's right.
For all the 20 marks, there's 2 aspects.
There's
where
most of the
students-
time,
yeah, most
they are-
of the time
the
it's coming
questions
like,
are of a comparative nature. So, like we discussed in the previous panel discussion, you know how to approach a 20 mark question if it is a sort of a comparison based one, where Miss also mentioned that you need to write the analysis part and then you need to go for evaluation before you go to the other
Next
part
point,
of the
yes.
discussion, where then you need to say, for example, if you have a question on trade credit versus overdraft. So you need to talk about the good things about the trade credit, of course in context, then some of the arguments or limitations with the trade credit,
credit.
immediate evaluation for
before
that,
moving on to the
before moving on to the
next source.
overdraft part.
I think it's also important to look in the 20 mark, the command word given. Whether it is a discuss question or whether it's a differentiate or whether it's a evaluate, assess. So if the question is about discuss, then or compare, in that case the comparison should be there. Otherwise I think it's more like each concept analysis, evaluation, and then go with the next
Yes, yes. But and the other thing that discuss questions mostly are for 10 marker.
one. 10 mark.
So here we could
8 marks or 10 marks.
8 marks or 10 marks.
Yeah.
Mainly we can look at command words like assess,
Assess.
discuss to what extent,
Evaluate,
evaluate.
yeah.
So keep that in mind. You have to look for the command word, and based on that you need to develop the answer like how you have been asked or have been trained by your teachers. And for a 20 marker, you need to see what sort of a question is this, whether it's a comparative one or not, based on which you need to
Yes.
develop your answer.
Also, I think one important thing to remember for a 20 mark is that answers must be balanced.
Yes.
In business, I think it's
It's
very
a very
key,
important
very
thing.
important
Yes,
thing
yes.
to balance. You cannot like write two advantages and only
One disadvantage, that's right. So you need to strike a balance between the points when you write in terms of a 20 marker and also the conclusion has to be a good
Yes.
conclusion,
Yes.
not just like few lines like
At
we
least
discussed in the
5
one.
to 6 lines
Yes.
should
A
be
detailed
developed.
conclusion in context.
In context,
Yes.
that's right. Okay. So question number 9. What is the general answer structure for external or internal finance question? I think it's a very
It's a-
broad question.
Yeah.
I think it's just similar to what we just discussed just now,
Yeah.
because usually this sort of question can come for a 20 mark where the comparison is there
Yeah.
for both.
Yeah, but keep in mind that they could ask any kind of a question as long as the examiner feels like
Yes.
they could take a definition question from external source of finance or a definition from internal source of finance. Up from there, they could even develop a 4-mark question,
Yes.
a 6-mark
6-mark
question.
question.
So I think to give a general answer, my advice is look for the command word.
Yes.
Yeah.
Because we don't know whether this question will be for a 2-marker or for a
Yeah.
4 or 6 or 8 or 10, because examiners, keep in mind, can develop a question up to any given amount in the paper as long as they feel fit into the case study. So answering the question to this is that do keep in mind that, like Miss mentioned earlier, focus on the command word and look at the mark. Based on that, you decide how you are going to develop the
Yes,
answer. I think
exactly.
the best thing advice we
Because
can
this
give
is one
that.
of the very deep topics that we have, one of the biggest
Yes.
topics.
It's a wide
So
topic.
it can come from anywhere,
Yes.
anywhere, yeah.
2 marks to 20 marks in any
That's
what I
section
said.
they can
Yeah,
ask the
they
question
They can
from this
span
topic.
any question from 2 to 20 depending on the discretion of the examiner, because this is a big topic,
Yeah.
topic that can go into so many different areas. So look for the command word and then see what sort of an answer that you can write or you should write based on the command word plus the given marks.
Yes.
Yeah.
Okay. So then question number 10. When the company is leasing assets occasionally, do they have to make a new contract?
I think usually when they lease, they will have an agreement with a fixed date.
Can we first give a small introduction to leasing, then it will be better.
Yeah, leasing is where the company can actually rent, in other words, we can use the term rent.
Yes.
But for a long term, for example, a construction company, each company may not actually buy a really big bulldozer. So they could actually rent it out from another company for a long time. This is actually called leasing.
Yes.
So for an agreed time, so let's say they took it for 2 years. So if the 2-year time is up, then yes, they have to renew the contract. Otherwise, in between, they don't have to. Is it so?
Exactly, yes.
Yeah. So I think that's pretty straightforward. Okay. In a simple example, take when you rent a house, an apartment, it's the same thing applies.
Yeah, same thing.
So for the period that you take the leasing or the rent, you will get into an agreement at the beginning, and in between there won't be any agreement
agreements.
until the existing agreement expires.
Yes.
So if they want to continue the lease afterwards, yes, they will have to get into a
New
new
contract.
leasing agreement between the two parties.
Yes.
Right. So question number 11. In peer-to-peer lending, it is said that all transactions take place online. Does this mean that the individuals could lend for people in different countries or only within the country?
It actually depends upon the foreign investment policy of the government to an extent. But usually the websites doesn't give any restriction for foreigners to register into this kind of websites.
Yeah.
So if any foreigner is registered in the website, of course he can lend the money.
As long as the foreigner has the faith on the business.
Yes.
Usually the transactions are wired through PayPal and stuff. So I think any person who is like entitled to these privileges can actually be involved.
Yes. I think it all depends on the government policy whether
Yes.
they have
Yes.
any restrictions for this kind of ownership or
Yeah.
with regard to this online transaction. And the other important thing is that how much these people have the faith or how much they trust
Yeah.
the business
That's
that they are going to invest. So I think it's not much of a concern with the
Yeah.
country, but with regard to the kind of relationship or the purpose.
Yes.
Okay. So question number 12. What are deferred shares?
Deferred shares are also called as founder shares.
Yes.
which is for the founder of that particular business. Now, why is it different from the other preference shares and the equity shares is that deferred shareholders can take the dividends only after paying the preference shares holders and equity shareholders.
That's right. So that is why we call deferred,
Yeah.
because it is the last thing that as the shareholders would get in the case of a bankruptcy after paying all the preference shares, which comes at first, then the ordinary shareholders, and then finally the deferred share. So like sir mentioned that deferred shares are usually owned by the founders, and sometimes it says the venture capitalists also would be the deferred shareholders, since they also are considered as the owners or the people who have invested, who would get the last. Okay, right. So then, like we had the discussion in the last class or the last panel discussion, we will now look at some of the questions from the IAL past papers. And the first question that we have here is from the January 2020 paper, which has come for 20 marks. I think we could first just go through the question first and then go to the case study for a quick glance. So the question is about a boy called Tarindu who prints t-shirt from Sri Lanka, and he is considering using a loan to buy a car for his business. So the question is, assess whether this method of finance is the most suitable for Tarindu. Okay, so let's quickly go through the question so that the students would be able to understand the application part, if we can quickly read it through. So this is the case study on 2020 January paper about this particular person called Tarindu, who is trying to develop a business for printing t-shirts. Okay, I think we can go back to the question. Okay, so assess whether this method of finance is the most suitable for Tarindu.
So the word suitable actually is the key that we need to look for. So when you are writing the answer, you need to make sure that you use this word and how it is suitable. For example, he's going to buy a car, which is a fixed asset, which will require a lot of money. So a loan is a suitable method.
Yes, of course.
And also, like we discussed, that moreover, he is a sole trader kind of a person, because it doesn't talk about having a limited liable company or a registered business as such. So we could assume that Tarindu, being a single person, run his own show. So that means he is a sole trader.
Plus a loan would actually guarantee him the full amount that is required for the car.
So any other points that how we could talk about the suitability of a loan?
Loan can be repaid in a periodical basis. So it will be easy for Tarindu, because from the sales revenue he gets, he can repay it conveniently. Which will be a suitable finance for his business.
Not like that he has to pay the whole thing at once, because car is a considerable amount of investment. So he could span that repayment to a period which he finds quite easier with his income.
And then he don't have to if he go for another source of finance, he might not get the exact amount required. But in a loan, he will be given the exact amount, and he can straight away buy the car, use it, and
from the money that he gets from that business, he could keep on paying
back.
Okay, so that's the analysis part.
That's the analysis part.
Okay, what would be the knowledge for this question? I think we should have started with that part. What should be the knowledge that a student could write to gain the 2 marks for knowledge?
Whether this method of finance is the most suitable for Tarindu. I think it's okay to write the explanation of a loan. What is meant by a loan? It need not specifically about bank loan, and better if it is related to the context also, because sometimes
sole trader, right?
as a sole trader. So you can relate the knowledge to the context of this case study.
So the loan would be the most suitable thing to define in context to the case study. Right. So then we talked about the analysis part. Why a loan may be suitable for Tarindu as a source of finance to buy. Remember, the purpose is to buy the car, and he is a sole trader. So that is why we talked about why a bank loan is suitable to buy the car.
Yeah.
Okay, now evaluation.
In order to get a loan, he needs to prepare a business plan, perhaps.
Yes.
So he needs to provide the bank with certain documents where the bank would actually be persuaded to give him the money, because
Yes.
he's a sole trader.
Sole trader.
He's a startup business, so it's like he won't have a lot of securities with him. So he needs to do the planning part.
Yes.
Another evaluation what we can give is we can discuss about other suitable finances that is
Yeah, that is possible.
good for him. Say for example, since he was running the business for a few
Some time, yeah.
it's for some time, so he might have some kind of
His own money
with him, his own savings. That could have been more suitable because he don't have to pay any interest for that,
Yes.
Yeah.
and no
And
repayment also needed.
I think in the analysis part, as part of application, we can bring in that Tarindu's parents are actually the grocery
Having
shop
a
owners.
business.
So even they can
might
also
not
lend
be
the
able
money.
to like back up. So a loan would be suitable, but then in the evaluation part, we can
Yeah,
say the
if
parents can also
Support,
give him
like
some hint.
either his own savings
and
or the
doesn't
parents
need
can
to take
support.
a loan for the entire car amount. So that I think can be used
Yeah,
as
yeah,
part of application.
Yes. So like you can see, there are no one best method. Okay. So what you need to understand is there are different ways how you could tackle, but the important thing is you need to focus on the question, the key terms in the question in order to give the answer. But
Yes.
in terms of the case study in the context, the students can develop it in different ways. There is no specific method that we could say, okay, these are the exact points. You may come up with different points.
Different
So
points.
only thing is those points should be valid, as well as those points should be in context to the
related to what
case
the
study.
case study is talking
Yes.
about.
And since it is a 10-mark question, what kind of a judgment that we could suggest? Once again, remember, it's not one best thing, but as a suggestion, what sort of a judgment that students could think about writing in this kind of a question?
Well, in my opinion, I always advise the students not to take a side.
Yeah.
Yeah.
Always
A
give
balanced-
a general,
a balanced
Yes.
judgment
So
will be
maybe
fine.
in here we can say he could have a better alternative other than a loan. Maybe a combination can be done.
Yes.
So
Yes.
something another, it should be a new point.
Yes.
But it should be linked to the case study.
That's
so
right.
it's kind of like where the student is able to reach that higher level that the examiners want. So if you like give a summary of your whatever written, it's not a good conclusion statement.
I think it's a good point that Miss mentioned, that it has to be a new point, because sometimes the students have the tendency to write one of the same point that
Summarize
they have
everything
written,
into the
or to
conclusion.
summarize the
Yeah.
point in the conclusion or in a
Yeah.
judgment. So bear in mind, in Edexcel, they specifically mention in every marking scheme or in an examiner report that students must write a new point.
A new
It's
point.
not a repetition of what the student has mentioned either in analysis or in the evaluation, but it has to be a new point.
point.
And also, like Miss mentioned, that you need to, it's better you take a particular balance judgment
Yes.
rather than taking a side in writing
Yes.
this kind of a question. But once again, it all depends. It
It all
depends on the
depends.
question. So these are some of the best ideas or the suggestions that we can give, but you need to use your own judgment when it comes to writing
Yes.
an answer. So these are not the prescribed
Yes.
points that we could always say.
Yes.
I think that we need to always make
Yeah,
sure
because there's no one specific way of doing
that's
it.
right.
So many ways, different teachers deal it with
That's right.
differently. So if we look at the examiner's reports also, we see so many different types of answers.
Answers, exactly.
So it's like there's no one specific way of
no
doing
prescribed
it.
thing.
Yeah.
So there's no prescription. It all depends on how best you can approach the answer within that given question in that context.
Yep.
Okay. So that's the first past paper question that we have here. The next past paper question is from 2019 November IAL paper. It's about a company into food processing
Yeah.
who is now planning to, or who has gone into Mexico for expansion. So it says that Tate and Lil needs extra finance to expand in Mexico. The methods available are loans and leasing. Now we talk about a typical
Yeah.
question of a comparison.
Yes.
Yes.
So the question is, evaluate which method of finance would be the most suitable for this company for its expansion, which is given for 20 marks. So once again, we will quickly look at the case study, so the students will be familiar with the evidence, and then we will go back to the question. Okay. So I think we can go back to the question now. So like we said, it's about a comparison between two methods of financing, loans and leasing. So the question is, evaluate which method of finance, that means loans versus leasing, would be most suitable for Tate and Lil's expansion in Mexico.
Yeah, so I think for this question, they should, for any 20 marker, the first step is to identify what will I write for the knowledge. So in this case, two concepts are there. One is loan, the other one is leasing.
That's
so
right.
your first paragraph should include the explanation of these two terms.
Yes.
Then we can start going on for the development, right?
Yes. So since it is a comparative nature, as we have already discussed, first we have to explain about loans, the advantages of or the suitability of loans.
Why the company should
Why the
go
company
for
should
loan
go
for
loans.
expansion.
Yeah, which we have already discussed about loans. And then moving on to the evaluation of loans.
Before we move on to the explanation, evaluation,
Yeah.
how can we put the context into the analysis part? If we quickly can discuss a
Yeah.
bit about the context part for students to be familiar with.
For example, this company Tate and Lyle is an ongoing business, a successful business.
That's
So a loan would be very ideal because they will be granted a loan
That's
very
right.
easily.
Because they have a good
They
credit,
have a good credit
ratings.
yeah.
They are
Yes.
likely to have a credit rating because
Yes.
it's an established business.
Yes. Anything else that we could put into the context?
It also talks about the percentage of food demand also increasing.
That's
the
right. I
healthy
think
food
32%
products,
is the
so
increase.
when they
increase in
approach
the
the banks,
healthy food
they can
products.
show them, okay, we are going to get more money from this expansion. So it's a guarantee that, yeah, they can easily pay back.
Because the banks
the
also
banks
will be
Yeah.
convinced
Yeah, convinced
because
and-
of the
Yeah.
market
Yes,
growth
yes.
that they have.
Because a bank wouldn't want to give money if they cannot get it back. That's the reason why they don't support the sole traders.
Yes.
So this is a large business, an ongoing business with a successful history.
That's
so,
right.
And then with the increase in demand, which is mentioned in the case study. So these are the kind of applications you bring
That is
in.
why I wanted to apply,
Yeah.
put that question,
By
because
writing
students
the
need to
name
know.
of Tate
Yes.
and Lyle will not
That's
get you
the thing.
any application
Exactly. So keep in mind that just because you put the name of the company would not give you any application mark. You need to relate it like how we have discussed now in the case, in the answer from the case study.
I can actually give one tip the students can use, which I actually, in my opinion, is very helpful to students, I find. When you read the case study, first identify what type of organization this is.
Yes.
What are the customers in? What type of market am I in? What type of product am I in?
What they are
Service
doing, the
sector,
business.
What they are doing.
Yes.
What is my likely elasticities in demand? So if you write your points based on these aspects, then application is done
That's right.
automatically.
I think that will give a good
Yeah.
way of thinking or understanding
Yeah.
the application if you try to give the answers in your mind
Yeah.
for these kind of questions. Right. Any other points that we could apply from the case study, or shall we now go to the
We can go with the evaluation.
okay, so then
Evaluation part.
evaluation where
Of
we
a
can
loan.
talk about the loan, the
Yes.
drawbacks, so the arguments against the loan.
Yeah.
Yeah.
So in the evaluation, we have to state the reasons that it may not be the most suitable sources for Tate and Lyle. The thing is, even though they are established business, there is no evidence given about the credit worthiness of the business.
Yes.
It's not given.
So we cannot say that the banks will be always willing to provide loans for
Big businesses.
big businesses.
That's right. Because we know that in history there are a lot of big businesses who have gone bankrupt.
Yes.
So there is no such guarantee that just being a big business would able to get a loan unless they can show the evidence or unless they could convince the banks in order to give them the loan.
Also, obtaining the loan is not like you apply for the loan today and you get it tomorrow.
Like you get the money from an ATM machine.
Yeah.
A lot of
it takes
documentation
long,
processes.
Long time. So these people are like, if you bringing the application, the
Yes.
case study talks about they want to starting it very quickly.
Quickly, that's right.
So in that situation, a loan might not be very suitable.
Because it takes time.
It takes
and
time.
particularly they are trying to take a loan from a foreign country in
Yes.
Mexico.
Yeah.
So it's not in their home country,
Yeah.
it's in a host country. So obviously that they will have to go through a lot of formalities in order to get the
Yes.
loan. I think it's a very good application point to talk about how it takes time and why that might be a concern
Yeah.
for the company because they want to start the business
Very
and
quickly.
run pretty fast. Okay.
So then we can actually go into leasing.
Leasing part, that's right. So once again we can start with the first analysis part, that why would leasing be a better option?
We can again link it to the same application we use, quick. Because leasing means the furnitures or whatever
The machineries.
machineries is already there.
Readily
So,
available.
Readily available. So you go today, fill the form, pay the money, get it back.
That's right.
So
So
immediately you can start
the issue that we have with the bank loan can be solved with
leasing.
a leasing.
So that is one of the advantage.
And
Yes.
most probably they are likely to get the most advanced machineries and
machineries, yes.
equipments.
If they were to buy through a loan, then they need more money.
That's right.
So in return, when they pay back, again it's a big cost for them.
Yes.
But if they lease it, they don't have to pay the full amount of
They have to pay only the
purchase.
rent.
Yes. So
Yes.
the most recent equipments, technologically advanced ones, can be acquired with a leasing
at a low
lower
cost.
Lower
yes.
initial
Low,
cost.
because they are into Mexico. Bear in mind that they are in the Mexico in the process of expansion,
Yeah.
which means they might need a lot of money.
Yes.
Yes.
So they could use those money for maybe advertising and
Other things,
promotion
yeah.
and other things rather than
Marketing and everything,
Yeah.
which is more crucial.
for the development
Yeah.
for the business in the country.
Yeah.
So they could use that money for these kind of other business activities to get themselves established in the
Yes.
country, while they could pay only a rent while getting the most
Yes.
updated equipments. Yes. Any other points that we could highlight, or can we now go
We
into
can,
the
I think, go to the
evaluation? So
yeah.
now we have to go to the evaluation of the leasing part.
Yeah. So I think a leasing would be more expensive in the long term when we really think about it. Because let's say, for example, a house, you're renting a house and then you are living there for 10 years. And then every month you're paying a rent. But if you actually purchase this house, by the time 10 years, you're already almost half of the payments are done and
And it's
you're
yours.
going to own it.
It's yours.
Leasing means you never own it.
It's exactly.
Yeah, exactly. If it is for a long term, then it will be too expensive for the business. Rather, they could have purchased.
Because we are talking about a business trying to expand in Mexico,
Yeah.
means they will be there for a long time, not for
Yes.
1 or 2 years.
Yes.
Yeah.
So in the cost, if they really took it in a long-term way, then in a business point of view, they could actually save a lot of money if they purchase.
Purchase it.
Yes.
Okay. Anything else as evaluation?
We cannot guarantee, because the food business, they also don't have a guarantee that the demand would be as such.
Yes.
There could be so many factors that could impact.
And now think about the
Yes.
current scenario,
Yes.
which has
Yeah.
been
Nobody
hampered
would have
with the
predicted.
food
Yeah,
industry.
yes.
So a lot of uncertainty will be there in case of the food industry.
So that
So-
that means if they go ahead with this leasing, then they could actually be in trouble a bit later if the demand is not made up.
Right. Anything else that we could bring in?
I think there is enough for a 20 mark with two sides talking. We can stick with little brief explanations of 2 points each
Yeah.
with evaluation. I
Yeah.
think that will balance the answer very nicely.
And I think there's one thing we can think about, since they're talking about this latest equipments and technology, I think since we're talking about the food industry, how much these latest machineries will be available on leasing? Will there be people who are willing to lease, or will there be machineries available on leasing?
Yeah, maybe
Might
some
be a concern.
specific machineries
Might not be available.
Available, yes.
So-
and if they purchase through a loan, the customization can be done.
Can be done.
But in a leasing, they have to just get whatever is available.
And that is also if it is available.
If it is
If it
available,
is
yes.
not available, I think the company would not be able
not
to
be able
go
to,
for
yes.
So the
leasing.
machinery and equipment may not fit for this purpose of
That's
the
right.
particular business.
Therefore, that it might be a constraint
Yes.
when it comes to leasing, because whatever the machine is only available, they will have to buy. So if a
have to,
particular
yes.
machine is required, but it is not available on leasing, there is no way they could lease that particular machine.
So if the student can think from the point of view of the business,
That's
I
the
think they can easily get points and easily apply it. It's not like application is a separate paragraph for
Exactly. It has to be
has
throughout.
To be in throughout the context. Every point needs to be related to this business.
That's
what
right.
they are doing, what
Yes.
they are planning to do, and
Exactly.
everything.
Yes.
And for the conclusion, like I said before, in my personal opinion, I advise my students not to take a side.
Side,
so
yes.
you cannot say it's better for them to go with
Leasing or
or
loan.
it's better to go with loan. But instead, you can create a new point saying that they can maybe go for a combination. Maybe lease the premises, or maybe buy something through loan, so they can balance it out.
Taking the purpose,
Yeah.
we can give the conclusion. Say,
Because-
for example, for equipments, maybe leasing would be okay.
Yes.
But for in the case of any property or a building, maybe a loan will be.
Yes,
suitable.
because once again we need to look at the question. It says suitable for expansion.
Expansion.
So
Yeah.
expansion does not necessarily mean only buying
Only
machineries.
buying
Buy
machineries.
So that is
Yeah.
the key thing that we can highlight in the conclusion. Since we talk about expansion, it will be a kind of a combination of the two things, like what.
And also, I think in the going back to the knowledge part, it's also important to highlight expansion.
Yes.
Because
correct.
that is also a key concept.
Yeah,
here.
when applies,
Yes.
we can talk about the expansion part.
That's right.
Right. So I think that these are the questions that we have from the sources of finance, but there have been some questions, maybe 1 or 2 questions from the previous teaching session, which we could take up quickly to discuss. There were 2 specific questions which I wanted to bring from the market positioning, the first teaching session. There has been a question from the students that how the market positioning can be related to demand and supply, or is there a relationship between positioning and demand and supply?
I think there is to some extent, because when you are like mapping the market, you are actually trying to find a gap, right, in it. So this gap actually, if it could be linked with demand, if that gap is a really needed gap in the market, then yes, of course it will affect the demand. But then again, the gap can actually be a gap. Like there's no demand.
No demand, yes.
Some reasons why, if you look at our tourism industry, for example, if we take back a couple of years back, like 15 years back, we had this budget class of tourism blank.
Yes.
The problem that time could be we were unable to supply if we take it.
Yes.
But slowly we are entering into that market
Yes,
now.
that's right, with the guest house concept coming up.
So I think it is linked to some extent.
Yeah, it is linked to demand and supply, as we have already discussed, but there is no guarantee, as we have discussed in the previous discussion panel. Every gap doesn't means that there is a demand for the product.
Yes. That's right. And the second question is that how to add value in a service industry, because we talk about differentiation and there we talk about adding value
Adding
and all these
features
things.
to the,
So how in a service industry add value can happen?
I think in a service sector, customer service is the main part.
Yes.
So training your staff to deal with customers in the most, like I think it can start with a smile itself.
Exactly.
Yeah.
So what we lack, if we take examples from Maldives, if we go into a shop, the shopkeeper probably won't smile at you.
The customer service
The
part.
customer service part.
Yes.
So that is where I think it can start to added value.
Yes.
So in the hospitality business, if we talk about, I think this is where the service sector is coming in. I think it starts with the staff itself. First, probably with a smile, the way they talk, the way they deal with situations.
That's right.
The way they deal with complaints. So I think that's.
I think we can relate to many examples here itself, because in tourism industry, there are resorts ranging from $200 to any extent, but that is mainly because of the difference in the service they provide.
That's
they
right.
provide,
That's
yes.
right. Like we can talk about how a $300 resort versus maybe 1,000,
maybe
1,500 or even
1,000,
2,000, 3,000.
Yes.
So yes, apart from the other facilities, one of the key differentiating factor would be the service. So like we said that yes, a people aspect can be an important part. Along with that, of course, the other facilities that they provide. I mean, if you talk about the tourism industry, the quality of the service or the quality of the facilities that they provide, the luxury factor. So all these could
like
be
the bed in a $300 resort
Exactly.
versus a $2,000 resort.
where you can
Exactly,
customize your pillows.
Yes, yes. it
So
will
a
be
simple
different.
example of a service
So
differentiation.
that is how we can add service,
Yes.
value to the service industry.
Yes. Okay, so that's it for today's panel discussion. So I hope that you have got some idea about how to write answers or how to address some of your questions in terms of the sources of finance. So we will see you again in one of the other panel discussion from another topic. So until then, have a good day and be safe.